And David, you're sort of taking the opposite, like 35,000-foot view, where you're looking at a lot of assets under your sort of purview. Do valuations in any of those particular categories worry you right now, or are you advising clients to kind of pivot out of one and into another?
One sector that we like a lot today right now is sort of healthcare. And I would really say sort of non-pharma healthcare.
Mm-hmm.
If you look at that sector, you're basically getting companies basically trading at a market multiple with probably 1.5 to 2 times the growth rate of the market. And again, relative to the defensive sectors, because I think Savita's right, we're sort of probably later in the cycle. I don't know if we're going to have a correction in 18, but we're sort of later in the cycle today. I think it makes sense to be a little bit defensive in that, given that time where we are in the cycle. And I think, relative to staples where valuations are kind of high, and also you have sort of more secular risks or utilities, which are very, very expensive, I think healthcare is a really good place to be from defensively positioned with good earnings growth, less secular risk.
Are demographics driving that? Is that in part a play on just an aging population that needs to consume more healthcare?
It would be demographics, also emerging markets. Mm-hmm. So you think about something like the life science tool companies. Mm-hmm. They play into, they have a lot of exposure into China. And you think, well, what's driving China's growth rate? What is sort of the secular drivers of China? It's like healthcare, food safety, water quality. These are things that all those life sciences companies sell into, and they're growing from more bioproduction. They're growing from more emerging market growth as well.
So life science tools companies, what's an example?
Say like a PerkinElmer per se, or a Thermo Fisher.
Mm-hmm, I see. I think of those tools as being sort of an overlap of healthcare, and again, we talked about technology kind of covering everything. This is in some ways a tech play too. And Dan, you were saying that Alger is in a lot of ways following tech developments that are in the healthcare space, and where do you see some of the things playing out?
Right, so we do see a lot of opportunity in healthcare. The demographics are great. The emerging markets opportunity is also strong. And we like the med tech area, the equipment area, and we also play in the pharma and biotech area. I think in pharma and biotech, for example, you've got, I don't know how many years ago the human genome was sequenced, mm-hmm. and then the development of ever faster, ever cheaper sequencing techniques. But that set the base for research that is now coming out with new drugs. Immuno-oncology is one of the big hot areas in cancer drugs. So these are drugs that understand sort of the immunomarkers on our cells and try to target the drug therapies more specifically to mm-hmm. Cancers are not all the same, basically, the differences among sure. cancers. Cystic fibrosis, company Vertex has shown pretty remarkable advances there in treating that terrible disease. The point being, though, in a larger sense, a lot of scientific advances that happened 10, 15 years ago are now actually emerging from the healthcare industry mm-hmm. as advances in drugs and therapies. It is coupled with, though, for example, on the equipment side, know those companies well that David mentioned, but we like, for example, Illumina, which is one of the genetic sequencing companies that provides the heavy horsepower to analyze specific genetic codes and sequences for clinical and research purposes. I would note there's also advances that are software and automation-driven robotic surgery. So a great company like Intuitive Surgical is showing improved mm-hmm. surgical results mm-hmm. by using more and more automation software, and also, of course, vision techniques to allow surgery to be done in that fashion. And so we see a lot of innovation in the healthcare sector, mm-hmm. And some of it is sort of the, I guess it's the flowering of the early scientific results that were achieved, and also combined with internet and cloud computing techniques.
Is that these kind of healthcare innovations and technological innovations, Savita, is that still kind of a section of the market that drives the U.S. economy more than some of its rivals? I mean,
oh, sure. I mean, I think that's one reason the U.S. has outperformed the rest of the world over the last 8 years is that, or maybe it's been longer, mm-hmm. is that tech is, the biggest percentage of the benchmark in the U.S. Biotech basically really only exists in the U.S. I mean, it's hard to find a meaningful biotech stock outside of the mm-hmm. U.S. So I think that one of the reasons that the U.S. equity market has been on such a tear is that it represents what's been scarce over, the longest close to the longest bull market we've seen, which is growth. And I mean, it's kind of interesting that we've had this bull market amidst a very disappointing economic backdrop. Every year we think this is the year where the economy really recovers and heals, and then it doesn't. I mean, maybe this is the first year where we've actually seen really strong indicators of economic growth. The Fed is officially done. But I think that, that the U.S. represents probably more of that secular kind of non-cyclical growth than other areas of the world.